Inflationary pressure can exacerbate economic recessions in the UK in several ways. Reduced purchasing power. Inflation erodes the purchasing power of money over time, as prices of goods and services increase. During a recession, when economic activity is already contracting and consumer confidence is low, rising prices can further reduce consumers' ability and willingness to spend. This can lead to a decline in consumer demand, which exacerbates the downturn by slowing economic growth even further. Interest rate dilemma. To combat inflation, central banks may raise interest rates to tighten monetary policy and reduce spending. However, during a recession, raising interest rates can be counterproductive, as it makes borrowing more expensive for businesses and consumers. This can further dampen investment and consumption, exacerbating the economic downturn. Cost-push inflation. Inflation driven by rising production costs, such as wages and raw materials, can exacerbate recessions by squeezing business profitability and reducing investment. As businesses face higher costs, they may respond by cutting back on hiring, reducing investment in new projects, or passing on higher costs to consumers in the form of higher prices. This can contribute to a downward spiral of declining economic activity. Supply chain disruptions. Inflationary pressures can also arise from supply chain disruptions, such as shortages of key commodities or disruptions to global trade. These disruptions can lead to higher input costs for businesses, which may then be passed on to consumers in the form of higher prices. During a recession, supply chain disruptions can exacerbate economic weakness by further constraining output and increasing production costs. Weakened confidence. Persistent inflationary pressures can undermine consumer and business confidence in the economy, leading to cautious spending and investment behavior. If households and businesses expect prices to continue rising, they may delay spending decisions in the hope of obtaining better value in the future. This can prolong the recession by prolonging the period of weak economic activity. Overall, inflationary pressure can exacerbate economic recessions in the UK by reducing purchasing power, complicating monetary policy decisions, increasing production costs, disrupting supply chains, and undermining confidence in the economy. Effective policy responses aimed at managing inflation while supporting economic growth are essential to mitigating these risks and promoting a sustainable recovery.